Bitcoin has seen some of the most volatility it has experienced within recent months. This being, of course, due to the fact that the SEC has sued both Binance and Coinbase. In today's video, we're going to be discussing the short-term price action from a technical and structural perspective. Will this downtrend continue, or can the bulls reclaim control and push the price up? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin on the smaller time frame and the macro charts. We're going to be discussing the short-term price direction from a technical and structural level. We're discussing the current range that we are trading in, and of course, what the bulls need to do to reclaim control. We'll also go over the weekly and monthly charts and talk about those from a technical and trend-based perspective. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We do daily videos for Bitcoin, focusing on the facts, the data, the technical and structural information, the economy, and news events. No hype, no emotion, no BS, pure raw TA. That's the kind of content you like and are interested in. Join us on Telegram. It'll be the second link down below. You'll get access to charts, updates, analysis, educational posts, news events, videos, and so much more content in here, guys. The second link down below. If you're interested in joining our trading channel, which is our VIP group, you can see in here we post trading signals like this Matic trade, exact entries, exact targets, exact stop losses. Take this Bitcoin trade from yesterday, for example, 144% profit. Exact entries, exact stop losses, exact targets with clear, defined definitions and justification for our trading. Along with that, you'll get access to additional updates, altcoin analyses, and all of our group chats for our VIP members where we do daily trading signals. Look at how some of our members are smashing in here, making nice profits as well on the side. For more information on how to join, go to our free channel. All you need to do is go up over here, click the pinned comments, and you'll find our message, which describes how to join and all of our information. I look forward to seeing you in there. Let's go ahead and get stuck into the video, however. So for the market data, where we usually start, we'll go ahead and take a look. At the moment, for the month, June is down 2.9%, up a little bit from the last 24 hours in percentage change over 24 hours, but overall for the month, we are still in the red, not looking too amazing. Looking at 24-hour volume, we can see the 24-hour volume is sitting at 83 billion, which is down 17% in the last 24 hours. Still relatively high. 83 billion is no small sum, and liquidations have dropped from a staggering 300 million down to around 103 million in over the 24-hour period. In the 24-hour period alone, it is down 5.79% to 103 million. So overall, liquidations are still relatively high, suggesting that volatility and volume have moved up and are still relatively high as well. If we look at the 30-day volatility index, we can see a nice spike on the volatility index there, indicating again, as rising volatility, we get a surge in volume, and we also get those surges in price action and liquidations. Looking at the 60-day, we can see a nice little jump up on the 60-day as well. After this plateau period, if you remember, we've been discussing this for a long time. We said after these long plateaus, after these drawn out periods of compression as per our volatility, we do generally see large moves. I've been warning you guys for a long time, we're going to see a large move, we're going to see a volatile move coming, and we had seen that with over $300 million wiped off the market in terms of liquidations yesterday alone. Moving on from there, looking at liquidations now, we can see within the 24-hour period, if we refresh the page, the majority of these liquidations are still coming from longs, as a lot of people entered late longs as the price pushed back into this higher range. And if you've been paying attention to our channel, guys, even in the free channel yesterday, we were telling you we were noticing exhaustion. If you go up over here and take a look, we were telling you guys we're seeing exhaustion. We're seeing the price exhaust, we're seeing bearish divergences pop up, we're seeing the price up at our resistance levels. These are the times to take shorts. Shorts were still favorable unless the range breaks upwards, which it didn't. In fact, we took that short in VIP, as you can see over here in our VIP channel, for massive profit. So go ahead and check it out. Moving on from there, guys, let's go ahead and take a look at DXY. DXY has pushed upwards and is currently testing some newfound resistance by this dotted trend line. It's our newfound diagonal resistance. If we go ahead and draw our diagonal from this point here across this point here, we can see we are currently retesting. In fact, we've tested about 5 or 6 daily candles above it, all of which have rejected. The fact that we're still compressing along it is a decent sign, but it is more of a sign that the market, including the dollar, or more should I say the dollar, is holding off for CPI and is holding off for the interest rate hike, which is coming relatively soon. Remember, we have CPI on the 13th and we have the interest rate hike on the 15th. So some big moves coming from the market, which will definitely shift around the dollar. And of course, if we do break this downtrending resistance here, we can expect a continuation up into its liquidity range between 105 to 106. And of course, if we fail to break through, if we do reject, we can expect the price to realistically come downwards to retest this uptrending support line. So do watch that. We do not expect the DXY to drop much lower unless the uptrending support is lost. If the uptrending support is lost, then don't be surprised to see the DXY pull back to this lower support range. But until then, a correction and bounce is definitely still possible and something we should be looking at moving into FOMC, moving into CPI. Looking at the stock market, nothing too amazing here, guys. We've seen our 4th daily candle now reject from the upper range, indicating this is a strong resistance and will remain resistance. I do not expect this resistance to break, and if it does break, it will be after interest rates, it will be after CPI. Until then, I expect compression underneath it, potentially holding sideways, maybe even up to retest it again, or maybe even down. Do not expect a directional move until we find out the data, because that will shift the overall risk in the market, and that will move the S&P 500. If we do correct, we are looking at a target of 4,200. If we lose 4,200, we're looking at a target of this uptrending support line in which Bitcoin could, in which S&P 500 could either bounce from, or what would be most probable, since we've had 1, 2, 3, 4 points of retest, this would be the corrective phase and the breakdown. So if we do retest our uptrend line again, I do not expect it to hold. I actually expect it to break down. From a bullish perspective, if the data comes out bullish, meaning CPI has fallen, interest rates don't get hiked, we can expect the market to react positive and push through. But the probability of that, in comparison to the probability of this, is lower. The reason being because markets moved on data, okay? There are market drivers, we have economic drivers of price action. The economic drivers determine the market risk. The market risk is basically determined by, again, interest rates, inflation, all that kind of stuff. And the market moves based on that risk. It moves based on perceived risk. So the only reason I see the market moving up again from another leg is if the data we get suggests that it will facilitate that. But if we do see the data come out negative, which if we look at our leading indicators suggests the data will, because we've seen rising inflation, we see NFP data going up, we see unemployment rate data going up, we see income and spending go up, all suggested that inflation is rising. The more probable scenario for now is the markets will react negatively going forward. The same goes for the Dow Jones, guys. We expect a breakout above here before any continuation. If we get that breakout, the price goes up. Until then, we are trending just above our uptrending support represented by the dotted trend line. If we do manage to break below it, we can expect it to be a move toward the downside. Let's get into Bitcoin, guys, and we'll keep today's video short and sharp. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And sweet, because a lot has happened. but a lot has not really happened. At the same time, we're seeing massive volatility. If we look at the daily chart over here, we can see some huge volatility, massive full body daily candles, absolutely engulfing each other, moving down, moving up, a lot of compression, a lot of volatility, a lot of emotion-driven price action. And I do warn you guys, and I warn my members a lot, when we are entering phases of upcoming news events, or we're having pieces of data that are currently impairing or impacting the market, whether it be from a fear-driven perspective or a euphoric-driven perspective, we do have to be a little bit more cautious, as the market is more likely to behave more sporadically. There's more likely to be market spoofing, meaning market manipulation according to order books, and the price can act a little bit more sporadic. Watch the higher levels when you're trading these ranges. Don't try scalp ranges. Watch the upper liquidity and lower liquidity zones and place your orders according to where those order chunks are. If you're trying to catch small intermediate moves between ranges, you're probably going to get liquidated, you're probably going to get stopped out by volatility, or the price might just completely ignore the structures you're drawing in and move in the opposite direction. So the reason why we're seeing that is, of course, like I said, Binance and Coinbase being sued. It definitely sparked a lot of fear in the market. It definitely has thrown a spanner in the works. But overall, guys, the direction is still the same, meaning that the direction from those news events has not really changed the overall daily direction. And the daily direction is still very much down. And to describe this, we've gone ahead and shown you via this downtrend. We have this black arrow, which represents an overall downtrend. Now, I've seen a lot of people draw in a falling wedge structure, and I'll go ahead and say this. The reason why I have not drawn that in, and the reason why I'm not talking about it, is because, so a few people ask me, whether or not the falling wedge is intact, whether or not the falling wedge is real or not, what matters for the move up is going to be the downward slope and resistance. The lower trend line is susceptible to fluctuation. At the moment, we could draw it in as a descending channel, we could draw it in as a falling wedge, okay? Or we could either draw it in as what we call here is a triangle, or a descending triangle formation, which is a bearish pattern. So there's many ways we can draw it in, and the lower trend line is susceptible to change, as trend lines or overall market structures are not set in stone. They can be manipulated, they can be shifted, they can be shaped in different directions. What is confirmed, however, are overall trends. And the trend of this structure, whether it be a descending channel, whether it be a falling wedge, whether it be a triangle formation, is going to be the point of confluence, or the trigger point being the daily downtrending resistance. So the reason I haven't drawn it in is because I don't think it's relevant. Because even if it is a falling wedge and we get the breakout for the flip upwards, whether it be the falling wedge doing so, the descending channel doing so, or whether it doesn't happen and it continues down, the trigger for the bulls will still be that same old trend line we have over here. And therefore, I'd rather not speculate, and I'd rather focus on the facts in front of us. And the facts are not only just facts, but the ones we can prove and are more confident proving. Because when it comes to trading, you want to take actions on confidence. You want to take actions on things that have higher probability of success. You don't want to infer things on the chart too much, because those inferences can be proven wrong, particularly in periods of volatility. So for the daily trend to flip bullish again, like I've been saying, we need to see two things. And the most important thing is going to be a break of the daily trend resistance. This is the downtrend. If the price is able to break a one single daily candle above, that automatically shifts the favor in the weekly bullish trend. Meaning we go from in favor of a weekly bearish trend to in favor of a weekly bullish trend, and therefore the daily trend is again bullish. Currently the daily trend is bearish because not only are we underneath the 28,000 to 30,000 resistance, the key point being 28,000, but also the daily downtrending diagonal resistance. Therefore, while we remain underneath that, we are in a weak bearish trend because the bullish trend on the weekly is still intact. We're in a weak bullish bearish trend as the trend is sloping down. So point number one is we need to break above that trend. Point number two is in conjunction with that, we need to see that metrics of price action have flipped positive. And if the metrics of price action flip positive in conjunction with a trend break, we have a higher probability of continuing upwards than if we only have the one. The metrics being speed, velocity, volatility, liquidity, okay? and more importantly, momentum. Now, momentum is a derivative of these. Momentum is a derivative of price action. Price action is a representation of these metrics, particularly price strength we determine based on these metrics alone. So when we're looking at the strength of price action, we want to be buying with confidence, meaning you want to buy longs from a position of strength, not weakness. This is where a lot of people go wrong. A lot of people lose money because they try to catch the dips too much. They're buying longs from a position of weakness when you should be buying longs from a position of strength. So you want to wait for the market to be in a position of strength before you load into higher time frame swing longs. And in that position, we're looking at longs again when the RSI breaks back above this trend line and pushes above this level. At the moment, we are still majority trading shorts. We have longs, scalp longs here and there, but we don't have many swing longs at the moment. So watch those 2 points for daily trend to flip bullish. At the moment, guys, we'll talk about the short term in a second. We'll go back onto the daily and weekly and then get into the short term. So the trend is very much down. And like I say already, respect the trend. For now, the trend is a trend until it is proven wrong. Resistance is resistance until it is not. Support is support until it is not. And therefore, the daily resistance is representing a downtrend until it is broken. If we look at our trigger levels, we can see the 26,000 to 25,800 is still going to be the bearish trigger, meaning a loss of this level is still going to push the price lower. We do need to see a weekly loss of that level because remember, these levels here are weekly levels. Remember, we have on the weekly chart, we go to the weekly chart really quickly. I think it's going to be this chart. We can see on the weekly chart, we have a few main key levels represented by the 200 moving average, which is sitting at around 26,400. We also have the Gaussian channel midline sitting around 25,000. And if we bring up the 50 EMA, I'll go ahead and do that now, which is represented by a red line. You can see the red line, the 50 EMA is represented by around 25,900. So we have a lot of weekly technical and structural support right below us currently. But if we do start breaking through these levels, the weekly trend will be lost. And if the weekly trend is lost, we enter a bearish trend. So a weekly candle close below these levels is required to push the price lower. I'll be looking for support at 25.2K to 24.4K. And again, if we do not see that occur, I'd be expecting a break of the downtrend. So a real quick summary, expect a continuation downwards until the downtrending resistance breaks. If that happens, the probabilities then shift in favor of a bounce back upwards. Okay, moving on to the short-term time frame, guys. Let's go ahead and get into it. I said yesterday's video, we would not be discussing this chart anymore, but what do you know, guys? The market is inefficient. It is wild out here, guys. The price pushed all the way back in, and thank goodness it did, because we got an awesome short right over here. An absolutely awesome short right over here, some absolutely massive profits. Unfortunately, this move up actually occurred while I was sleeping, so I didn't get to trade it. I traded the move down, massive profits. I obviously shorted down over here a little bit, got this wick down over here, and then I went to sleep, woke up, got an awesome entry on shorts over here again, had some altcoin shorts on ADA, Matic, Bitcoin, massive profits, guys, great to see. Congratulations if you're following, but once again, congratulations if you have this chart laid out. I've been saying from all the way back over here in May, this chart is going to be the most important chart when it comes to predicting ranges and directional moves of Bitcoin on the short-term swings. And for everyone who's recorded this chart down, who's copied this chart, and has been taking these shorts upon these breakdowns of resistances, taking these longs upon these deviations or retests of supports, you've made some massive profit, guys, so congratulations. But let's talk about what's happening. So currently, the trend is still bearish. Right? We have a bearish trend as two things are in occurrence. Number one, we are underneath that daily downtrending resistance. Okay, that is that daily downtrending resistance. You can see the arrow over here represents daily trend bearish sub 28K. Cool. Well, underneath that, we're bearish. So a daily trend is bearish. Short-term wise, we're on a horizontal consolidation. Great to see. The horizontal consolidation has massive deviation up and down. Of course, this is huge amounts of volatility represented by news events and debt ceiling announcements, all kind of stuff that's kind of thrown the price around. But if we look at the range bear, okay, the range high resistance, okay, and the range low resistance, and we eliminate these deviations, pretend they don't exist, we can see the price is very much pushing in its horizontal consolidation. Perfect. Awesome. Good to see. So the next question is, where will the price go on the short term from this range perspective? As we've seen before, if we lose the range low, we expect a move towards the retest of this lower range, which is 26,000 to 25.8k. We'll come to a very small time frame in just a moment and discuss the probability of a bounce upwards or correction lower, but as we can see now, we're currently retesting this level of support. If we do lose the low here, sitting around 26,300, we are expecting a short-term correction back towards 26k, guys. If we do retest 26k, that increases the probability of a strong bearish move and potential loss of the weekly trend that can push the price into this lower range, okay? Because remember, as we are below this horizontal consolidation, the probabilities of a continuation lower increase as opposed to when we're in or above it, and vice versa if we are above it. Okay, so moving on from there, guys, we can see we do have resistance stacked above us. We have our liquidity zone above us, which is sitting at around 26,500 to 26,600, and we have our POC level at 26,800 sitting directly above us. These are the two levels we need to break above to start seeing range bullish strength build again. At the moment, we have range bearish strength as we have pushed downwards from this level. We had range bullish strength as we pushed back into and through this resistance. Remember, as we pushed down from this level, that is when we had range bearish strength that took us down. As we push into this level and above, we have range bullish strength. As we retest these liquidity zones and reject, the direction of that trend continues. And as of right now, as we had not had a bounce, the direction has to be assumed toward the downside. So now that we've defined what's going on, let's really get into the nitty-gritty of it. Let's talk about what is happening on the short term with some technical indicators. So let's do a technical analysis. Again, I want you to keep in mind everything we just discussed from a structural level, because when you're doing TA, guys, TA is a tool to apply probabilities and strength of direction. It is not a tool to tell you what to do or when to enter. It is purely to define strength. So we'll use structural levels in conjunction with TA, our technical indicators, to actually make our decisions. What can we see from a technical perspective? And I know a lot of you guys have been watching the channel for a while now. You obviously know we use these indicators, and you probably know now what they more or less mean. So what we can see first and foremost on the hourly chart is we're seeing from a price action perspective is obviously the price is underneath our liquidity zone, which is bearish. Perfect. Okay, we have a short-term bearish trend. We have an overall downtrend. The downtrend is very clear. We'll go ahead and define the downtrend right now with a trend line. So let's go ahead and define this downtrend. It looks like we temporarily broke out of the downtrend, but we've actually pushed back into it. So the downtrend is very much intact. The downtrend is clear. Along with that, we have decreasing momentum. Okay, decreasing momentum represented by the RSI, and we have negative momentum as well represented by the Marcus over B. According to Marcus over B, we had a little bit of a jump up over here representing momentum was actually strengthening but still negative, which resulted in that move upwards, or again, not which resulted in, but reflected in. Remember, the Marcus over B doesn't result in a move going up. It happens at the same time as the price needs to move up, or should I say, for the metrics of price action to turn positive short term, or if volume, momentum, velocity, speed, liquidity, all that kind of stuff start rising, okay, that is both reflected on the price action chart and it is reflected by the Marcus over B, as the Marcus over B is a derivative of price action that reflects this. So it's very important to understand. Technical indicators don't cause the price to move. Market metrics cause the price to move. Technical indicators are reflections of those metrics. So when you're using TA, you want to use leading or as most leading indicators as you can, so you can get the most accurate or quick results or changes or shifts in these metrics to get better decisions. If you're using incredibly lagging indicators such as MACDs or whatever, it shows changes in these metrics well after the price has already moved, so you're always one step behind the market. When you're using leading indicators such as the RSI or semi-leading indicators such as a MACD and certain compression bands such as the bands I have with the Marcus over A, you can be ahead of the market, or at least you can be up to date with the market, and then use your understanding of price action and liquidity zones and direction and strength and structure to then infer probabilities of certain directions. So looking at this, it is not looking very good. As you can see, we're moving down. Not only have we had that, we've also seen a lower high print. So that is not good. Let's go to the smaller time frame. 15-minute chart, guys, breaking it down bit by bit. We got that trend line. You can see we'll go ahead and quickly slightly adjust that trend line. We take it from this point here because that was our bearish divergence. Remember, we had a bearish divergence over here. So we take it from that first point, as this is nothing more than liquidity grab. Awesome. Knowing that, we can go ahead and adjust our trend line again, and we'll go ahead and pop it on the line of best fit, which is around about this level. You can see a move upwards, a fake out. Awesome. Trend is not looking good, guys. It is obviously looking quite bearish. We can draw an uptrend over here, try to draw it across, and we want to use that RSI to confirm it. So we're using the RSI, we're going to drag it across these levels. We pinpoint those levels. We can see we have retest. Awesome. Okay, we'll leave that one in over there. Not seeing too much from that. Again, the price action is still quite sporadic. And as you can see, we're kind of going as we go over here. What we can see is we do have rising dots on the market side of B. Not only do we have rising dots on the market side B, we have triple dots or triple points, or these points in conjunction with those dots, decreasing. So we see a degree of divergence. Now it is on a 15-minute chart, so for all we know, this bullish divergence may have already played out and likely has, as we did push momentum slightly positive and is now dropping back down. So I wouldn't be looking at this right now and saying, okay, we have a bullish divergence forming, the price is going up. I'd be looking at this and saying, okay, we had a bullish divergence forming. It has formed, it looks like it tried to go up, but it failed to get any higher. So I'll be ignoring that for now, but it's something to be keeping an eye on, and definitely a good piece of information going forward when you are trading for yourself. Short term is definitely not good. Let's look at the smaller time frame. Okay. 5-minute chart, it looks like we had rising price action right over here. Of course, that was upwards. We had, of course, a potential rising wedge over here, which we did break down, and we've now lost our support level. You can see that we do have support along this level on the 5-minute chart, along the 10-minute chart. You can see we do have a decent amount of support over here. Last time we dropped below, we had a huge liquidity wick. I do expect the price to move downwards as per our initial analysis. I expect it to continue downwards into this range unless on the short term, the price can push back above this local high we printed on the 15-minute chart. So moving back to the 15-minute chart, if you do remember, we had obviously a local high, we had a lower high. If we can break back above this lower high, that could potentially push the price upwards. Until then, expect the price to move down. Thanks for watching. I hope you had a great day. I'll see you guys in the next one. Cheers.